Danger warning. A worldwide disaster ahead. If you think U.S. stocks are on a life raft, just look around the world, which become much rougher. And this is a very serious thing. Get ready for a brutal riptide of more economic upheaval and woes. It can barely seem possible that anyone is more pessimistic about corporate earnings than American shareholders right now, with the U.S. stock market down approximately 15% for the year, and the U.S. banking system coming unglued at the seams before our eyes. But if you take a moment to look around the world, you may be very surprised to learn that American or U.S. stocks are not nearly as bad compared with their counterparts worldwide. And measured against the gloom in bonds, U.S. stocks are like a sunny spring day. Take time to think about it. For if there's one thing we know about global markets these days, it's that they seldom diverge for long. So it's become more likely that U.S. equities will plunge. Just take a look around the globe to see a few examples from the world of truly Olympian value destruction. The British stock market has been brought down to the tune of 22%, or about half again as bad as we have it. You can blame energy, banking, and telecoms, because those are the downside leaders for the Europeans. Particularly basket cases such as wireless giant Vodafone Group, down 30%, and the Royal Bank of Scotland, down 44%. The French stock market is also down 22%, led by energy and banks. The Belgian stock market is worse, down 30%, with the German stock market down 24%, Austria down 23%, the Netherlands down 21%, and Spain down at least 23%. And so it goes elsewhere on the continent. The news does not get better. Sweden is off 23%. Turkey is down 25%. Russia is down 23%. And Greece is down 36%. Or how about Asia? Once the crown jewel of global growth. The Chinese market is down 31%. South Korea is down 27%. Malaysia is down 29%, and India is down 43%. And the best in the whole region are down half as much, but still quite a bit, as Japan has lost 16% of its value this year. Taiwan is off 14%. Singapore is down 19%, and Australia is off 21%. It makes this country look good somehow, even though it's not. And Latin America, well, the bear market in Brazil has now only just begun. It is down just 12% so far, after being up as much as 22% in mid-May. Mexico is hanging in there at 5%, supposedly propped up by the narco-trafficking business. But Argentina has done a lot worse, sinking at least 20%. Today's market volatility could be likened to that of the tech bubble in the pre-Depression era. Most of the European and Asian countries' biggest companies are banks that have suffered the same fate as USA financial institutions. gullible and desperate for income at a time of record low yields in the mid-2000s. They were tricked by Wall Street investment banks into borrowing to buy high-yielding mortgage-backed securities that were mislabeled as high-quality, low-risk investments. The global dominoes are primed to fall. You need read only a single day's worth of headlines in the news to gather that a worldwide, synchronized economic wipeout or disaster is now underway and is beginning to pick up speed or steam. French manufacturing confidence fell in July to the lowest level in 5 years. Sales at Japanese department stores fell in July for the 5th straight month. New Zealand's service industry contracted in July for the 4th straight month. Singapore's overseas shipments dropped in July for the 3rd straight month as companies shipped fewer electronics to the West. The impact of slowed economic growth worldwide. Yes, the worldwide depression is coming. It might just take a little bit, but it will come. Things will change. In many, many places, a good wave or a perfect wave of growth has reversed into a brutal riptide. And so now, the Wall Street Journal has reported the Western credit crunch and capital expenditure slowdown have drained sales, and the cheaper dollar has reduced Indian tech company profits, and at the same time, rapidly rising labor costs have permitted competition to emerge in much lower cost countries in Eastern Europe and the Philippines. The big India tech company shares are down 30% in the past 10 months versus a negative 18% for U.S. techs. So, meanwhile, fear has gripped corporate bond investors in ways that make stocks problems look very tame. The Merrill Lynch Corporate Master Index, which tracks the performance of investment-grade rated corporate bonds, shows at least 72 of them trading in distressed condition, or more than 10 percentage points over treasuries, 28 of them issued by banks. So that means corporate bankruptcies are on the rise and are virtually inevitable over the next 18 months or so. Many banks could fail. The managing director of Institutional Risk Analysis or Analytics has told Dow Jones Newswires that he expects at least 110 banks with at least $850 billion in assets to fail by next July, which is 8 times the Federal Deposit Insurance Corporation's reserves. A spate of bankruptcies is coming. Yes, there is major problems with the worldwide economy. Well, the U.S. economy is in major trouble. In fact, yes, the whole world is in trouble. Serious trouble, financially, and in many other ways. And these are more signs of the end times transition days. There is transition coming, change, and there are many signs.